All right, let us begin clicking our live buttons here. Hope you're having a good Thursday evening here. We're going to make sure all of our connections are good. If you can let me know if you can hear me. Let's blow up the chat here on Zoom and let's say hi to our Facebook family as well. We're going to get started right on the hour for another JK deal reveal. And here we are right on the hour. Thank you for logging in. Thank you for being on time. And so here we go. My name is Kyle Duelund from JK's Real Estate Partners. Hope you're having a fantastic Thursday. This is a virtual, not virtual background. It's actually, there's too much sun happening right there, but wanted to share with you this beautiful background from Acapulco, Mexico. And so let us begin with another JK deal reveal where we are going to analyze this time a 19-unit apartment building in Ohio, and we're going to see if it is a deal or no deal today. So for those of you who this is their first JK deal reveal, the time is now. It's not too late. We are getting excited on these calls. Why? Because we want to get into negotiations lightning quick. We are not going to get stuck in paralysis analysis. We are going to be looking in markets that are just way different compared to most Canadian markets and markets you're probably familiar with. So we like to say buy at half price for double the returns. We are making our investments when and where they make sense. And so today we are going to be analyzing this 19-unit apartment building that was submitted in by Sergio. So thank you, Sergio, for this. 2260 Noble Road, Cleveland Heights, 44121. We know Cleveland Heights very well. It is a suburb of Cleveland, Ohio. We own a number of properties in this suburb. And side note, just real quick, taxes are very high in the suburb, and utilities. The utility bills can get pretty high as well in this suburb because it actually has two water and sewer bills. So just so you know, very particular for this suburb. But we have a 19-unit apartment building for $670,000. And this is basically the information we have here. It's fully occupied. It is Section 8 tenanted, which means those rents are basically guaranteed by the government. And so the U.S. government direct deposits rents into the owner's bank account every month. It's all one bedrooms, one baths. The owner and tenants split utilities. The owner is in charge of water and sewer. The tenants pay for gas, electric. And the seller is reporting $156,000 of yearly income, and the net income, so after expenses, everything except the mortgage, we have 91,000 net. So the very first thing that I would invite you to do if you're looking at these type of numbers is to just get a quick sense for the expense ratio for the building. We want to know if their net income is completely out of whack in ratio to the yearly rents. So how do we do that? We just pull out a calculator. So let me go pull one up right here. You should be able to see one popped up on the screen. Let me know if you can see it. If not, it's not the end of the world. But basically, we take the net income. I'm getting some people in the chat. I think you can see it. We can. Thank you, Sergio. Sergio, the man of the hour. Fantastic. And so here, just take your 90,845, your net income, and divide it by your gross income. That's going to give you the amount of the gross that's net in a percentage. And so we see here that 58% of the yearly gross rent is net. Or say it otherwise, 42% of the gross income are expenses. So you just deduct it off the 100%. 58% is net, and then the 42 would be expenses. Now, in an apartment building where tenants and owners split utilities, it is a rule of thumb that you can basically use a 0.55 multiplying factor to just do a quick trick rule of thumb to see where the rents fall, where the NOI, the net operating income falls, or a 45% expense ratio. This one being in Cleveland Heights, though, that's a quick rule of thumb. And as you get to learn more about each city you invest in, you'll get to know a little bit more. Those taxes and utility bills in Cleveland Heights really do eat it up. So I'm going to take a 50% expense ratio. I think that is much more accurate for a Cleveland Heights apartment building. And so taking basically a 155,959 multiplied by 50%, I would be more expecting a $78,000 NOI, not a $91,000 NOI. So immediately, I'm thinking there's probably something missing in here. Does this seller self-manage? Are they underreporting certain expenses and so forth? So I'm already thinking, there's something up, and I'm going to dive in just a little bit deeper to make sure I really understand what's happening with the income. So the seller's reporting 90,000, 91. I think more 78. In my calculations, do you think we're going to use the seller's numbers or our numbers to basically justify our offer, right? Of course, we're going to use our numbers, or we're going to use the most conservative numbers. So really quickly, I'm expecting it to be about 78,000 here. This is the point where you start to determine what you are prepared to offer for the building. If you know how much this thing is making in 1 year, minus keep the mortgage aside, so you know that this is making 78,000, you can basically figure out what you're willing to pay for it by dividing by your cap rate. Whatever cap rate that you're comfortable buying a property at, you divide your NOI by that number, and you get basically the most you're willing to pay for that building. So if you're willing to buy 10 caps, you divide by 10%, or 0.10, 0.10. And so if you're comfortable buying a 10 cap, you'd be willing to pay $779,000 for this building. Okay. If you're willing to, you're only going to buy a 12 cap, that's your investing criteria based on cap, you're going to divide by 12%, or 12 cap, or 0.12. And so if you buy 12 caps, you are going to know that your maximum that you're going to pay is $649,829. And you can keep going like this depending on what you are investing in. Let's say you are only investing in 15 caps, which would be aggressive, but that might be your criteria. If that's the case, then the most you're willing to pay is $519,863. Recall the owner is asking $760,000. So what we can do is we can take that NOI that we think it's going to be doing based on our quick trick rules, and we can divide it by their asking price. So basically, they're selling this building at a 10.3 cap, at a 10 cap. So if that's okay for you, then you're in luck, because you're probably going to get a yes if you offer a full price offer. But if you're looking at a 12 or a 15, that is how you find the calculations to basically place your offers based on. All right, so basically that's what it is. We have a 10 cap, fully occupied, government subsidized rent program here. And there may be some lighter expenses than we think. The seller is reporting 91,000. I'm expecting more 78. So we're going to dive into that. You can dive into that more upfront in your initial negotiations, or you just lock it up under contract. If you think this is a good deal and you think they're right, well, lock it up. And in your due diligence process, then go in, dive deep, and then you can challenge the numbers. And hey, you said this was 91,000. I'm coming up at 78 after the verification, and then you have a pretty solid leg to stand on to renegotiate as needed. And it's not your fault. It is based on what the seller provided as information. That's what you based your offer on, because remember, we are in the 5+ unit space here. And so the value of this building is directly related to how much net income it generates. So it's a perfectly valid reason to renegotiate if the seller gave you some wrong information. Now, right up front, you're able to identify that probably something is up. So I would challenge some of it right up front, not everything. I wouldn't give them too much of a hard time, but I would let them know right up front that my offer is based on the numbers provided, and based on those numbers, here's my offer, et cetera, et cetera. So just be aware of that. So as always, you do likely want to still have a look at what the area is doing. So you can type in the address and go on Trulia, We're going to take a look at crime, but I didn't even need to go here because Cleveland Heights in that zip code, I know there's no crime here. See, gray is the lowest crime rating on Trulia. I'm not worried about Cleveland Heights. Cleveland Heights does share a zip code with East Cleveland. So the closer you get here, the more it will, you might want to take a look for, just be careful on what's happening there. But Cleveland Heights in general, no problem for crime. Other than that, the rents. So the rents are currently not controlled, but the government is paying for them. And these are 1-bedrooms. So let's take a quick look at what our friend Rentometer says. They basically say that the rent is between $600, $650 for a 1-bedroom in this area. And we can reverse engineer the numbers from the seller here to see how much they're getting right now. So if yearly they're getting 155,000, let's say just 156,000 for round numbers. This is a 19-unit apartment building. And so each unit is giving about this per year. There are 12 months in a year. They're getting $864 a month, which is well above. Well above. It is above the average, which is surprising. And so just keep that in mind. The opportunity to increase rents is unlikely for this building. And we don't know for how long or the last time renovations have been done. So if we lose tenants, we have put in a little bit more money, you most likely won't be able to increase rents above what they are right now. I think they're pretty much tapped out. So your value add is difficult to achieve in this case. It appears to be difficult to achieve, but which is why it's all that much more important to be able to acquire this at a discount day one, right? You want to buy it with cash flow, and you want to buy it, under market value from day one, because there's not so much value add to go get by forcing it up on rents anyways. One really cool trick here, the fact that it's in Cleveland Heights and we know the water and sewer bills can be so costly, is you can control the water usage and sewage usage on your tenants by simply controlling, for example, putting water reducing flow valves on faucets, shower heads, etc., having high efficiency or lower flow toilets, etc. These are ways to decrease the water consumption, which is on the owner's back, don't forget. And the less water comes in, the less water goes out. So even your sewer bill, which you have basically two in Cleveland Heights, will both get reduced. And so that is something you will want to keep an eye out in any property you buy or you're looking to buy, but especially Cleveland Heights, because again, that double hit, but actually it'd be a triple hit otherwise. So remember, if you want to increase the value of a 5+ asset, because the value is based on income, so you can increase the income, increase rents, bringing in additional services, etc., charge for storage or garage or parking, whatever, pet rent, do what you want to increase the income. That's great, but you can also decrease the expenses. Both will have a significant and positive value on your assets, bankable value, the value at which a bank or a lending institution will, for example, refinance you, or a seller or someone would be willing to buy it off you for. So increase income, decrease expenses. Here we go. We basically have a 10 cap here. Tell me, is this a deal or no deal for you? Let me know. Is this a deal? Oh, Lordy Lord. Okay, this is going to be difficult here. Maybe I can find an angle for you. There we go. Deal or no deal? We have some deals, we have some no deals. So remember what this basically means. Does this mean I am done? I'm not going to spend a single more minute. I won't send an email. Not worth my time. Next. That's a no deal. Or no, this actually looks like something that, no, the numbers aren't, you're not going to find 15 caps, right? In most cases. You have to create those deals. But is this something that's worthwhile putting an offer in, right? And if so, what would your number be? So hopefully today I gave you again the quick trick on how to quickly just, you get the bullshit radar going. All right. So I do think they're fluffing up the numbers a little bit, not terribly, but I think almost 10%. I think there's a 10% fluffing of the numbers happening here. And very little upside. Guaranteed rents is nice. Now, really, what we need to do is buy it at a discount. And so based on that 78,000, you have to decide what is that cap rate that you're happy to buy, right? If for something like this with guaranteed rents, I'd probably be somewhere in the 13 cap range to start seeing, is the seller open to something in the low sixes? They're asking 760. Keep that in mind. So me coming in with a $600,000 offer, it better be cash if you're going to be taken seriously, but they have to be comfortable somewhere in this range so that you can start your negotiation. So I would have this 600,000 in my mind as I'm calling up the seller, the wholesaler, building a relationship. I'm not throwing that number at them right now. The person comes first, the relationship comes first, the deal comes second, and maybe it will be next month, maybe it'll be next quarter, maybe it'll be next year. Doesn't matter. But at least I know where I'm kind of in my mind so that we can start our negotiation on the right foot. So hopefully this was helpful for you. Hopefully you enjoyed this this JK deal reveal. I think this is worth moving along. Do I think it's going to get accepted right away? Absolutely not. But life happens. Things change. Maybe they're firm at 700 right now, but next month, they're going to catch COVID and they're going to be on the brink of death. They have medical bills and so forth and so forth. We've already spent that 10 minutes looking at the deal. We know what our number is based on the cash flow, based on the numbers. So now it's just a matter of putting it in our follow-up system, building the relationship. And don't forget, it might not be this deal. Maybe picking up the phone and talking about this deal will lead to another deal by that seller or that wholesaler. So the deal behind the deal, never forget about that. So I think it has the potential to be a deal. And next week, apologies in advance, we are not going to be having a deal reveal. We are going to be having a full 90-minute opportunity presentation. If you've already attended one that we did last week, we actually the feedback has been overwhelming. It's been fantastic. We actually decided to do another presentation, and so this is it. If you've not already registered, the link is right there, n4t.club/free training. That'll get you there. And so that's next Thursday. Hope you'll see you. And we are basically going to show you this opportunity. It's going to be to join us for our upcoming, not this weekend, but next weekend, full weekend training, our master class. There's, attend next week's presentation. You're going to see all the bonuses that we're putting in there for you. It's really redonkulous. We're going to have a whole bunch of fun in the process. And if you'd like your deal to be looked at, revealed, just like Sergio Sinelli, we had some from Mark and Soros. I think Julius, we've had Azad. We've had a whole bunch of people submit their deals for review. And if you want your deal reviewed, just go to our website, n4t.club, or send us an email at info@nowfortomorrow.club, and we'll put you in the queue. And let's make some deals. So, as always, this is Kyle checking out from Acapulco, Mexico, wishing you a wonderful evening and inviting you to do Now for Tomorrow for that lifestyle you deserve. Take care, everyone.